Lot of news flow to track at this point in time. That was Deepan Sekhi talking about the IDBI divestment. But along with that, the big news remains to be on GST, wherein the India panel has supported the proposal of two GST rates. India GST panel has recommended scrapping the 12% and 28% tax rate, which means that the other two tax slabs, which is 5% and 18%, they are going to stay. But along with that, there's a caveat as well, a 40% tax on which are items that is going to be applicable, and that is going to be the luxury end, and specifically the high-end cars that are expected to be taxed under the 40% GST slab. So yes, of course, on those high-end cars, the luxury cars rather, they are expected to have the most of the hit. But let's understand what could be in store for the industry, and let me also welcome Saharsh Damani, CEO of FADA, joining us on the show right now. Hi Saharsh, good afternoon and good to be speaking with you. This 40% tax on luxury cars, what do you make out of it? Because Saharsh, yes, we do understand that luxury cars don't make a significant volume driver for the industry, but the other fact of the matter is 40% add on to over 20% of the cess, that will equal more than 60% of the cost for the buyers.
Hi, thank you for inviting me to your show. Before diving into your question, I would first want to say that FADA wholeheartedly welcomes the progress on the GST reforms and the positive direction towards a simpler two-rate structure. This proposal to rationalize slabs is aligned with what FADA's long-standing representation on reducing GST for entry-level vehicles and rationalizing cess, which will improve affordability as well as expand demand in the mid to long term. We also note that several states have raised concerns about revenue loss and sought adequate compensation. While there is a proposal to keep luxury item under the 40% bracket. These discussions highlight the importance of balancing fiscal stability with industry growth. Coming to your question, currently the luxury vehicles, if we see on an annual basis, we sell around 50,000 vehicles in the luxury category, and they all come under 50 to 52% tax bracket, so which is GST plus cess. And if the council decides to bring this down to 40%, I think it's a good move from the auto industry. We wholeheartedly welcome this move. The only thing remaining is what happens to the cess, whether that also gets cleared off, because as we understand, when GST got introduced, cess was brought in for a temporary period of 5 years, but it got extended because of the loans which the government had taken. And now is the right and apt time to do away with the cess. We at the same time also see that automobile retail urgently require a quick decision. While the committee has agreed for taking this matter up in the GST Council, we are at the cusp of entering the festival season with Onam in Kerala coming up next week, also Ganesh Chaturthi following during the same days. So we anticipate and urge the government that if decision can be done in a quick manner, it will help us spread out the sales over a longer period of time rather than squeezing it towards the end of festive season, which is Deepavali. So that is what we had also requested both the Heavy Industries Minister, Mr. Kumaraswamy, and Industries and Commerce Minister, Mr. Piyush Goyal, yesterday in our meeting. And both of them had in fact assured that government is well aware about the situation on the ground and they are working quickly towards resolving these issues.
Saharsh, point taken, and we also have with us Saurav Agarwal, tax partner EY India, to discuss about this two-rate tax structure. But Saharsh, one more question to you regarding the festive season which you mentioned. Are dealers now forced to give some kind of discounts in between this clarity is there, or till the time one actual decision is taken? Saharsh, this question is for you.
Yes. As I said, discounts are already at its peak at this point of time. While inquiries and walk-ins are quite healthy, What we are anticipating since 15th of August is there was a drop in conversion rate. So, which means that apart from the discounts which are already on the table, customers were keen enough in asking about what kind of new GST rates will be applicable, what is the kind of discount they'll get post the reduction in rates. So, I don't think too much of discount will come underway at this point of time because we are already sitting on high discount levels right now. What, as I said, customers are anticipating is the new GST rate, which may come down from 29, 28 or 29% to 18%, which is a flat 10% further discount what they are anticipating at this point of time.
Taken, sir. But thank you so much for helping us understand the industry dynamics at this point in time. Well, of course, we are also reading such reports with respect to discounts. But let me also welcome Saurabh Agrawal, tax partner at EY India, joining us on the show. Saurabh, firstly, your take on the two GST tax slabs for which the GOM has agreed with, because for now the 12% and 28% tax slab is to be scrapped. What are your thoughts on the same? Is it on the expected lines?
So, Srishti, it was quite expected for long. With all the global trade tensions out over there, this is really something which is a blessing for the Indian industry, which shows the confidence of the government in the India consumption story. And I'm sure that industry will also see the same confidence. I think 4 points which are very, very important. First one, which I'll say, is planning of inventory and credits, because there will be inventory at the end of the distributor, at the end of the retailer, and more so for those products where the change in slab is going on the downward side. So, for example, if something is going from 12 to 5, then that particular thing is very important because the dealer or distributor margins are not that much that they can use this particular credit on a going forward basis, which can lead to a bit of a working capital strain for them. Second important point, which is there, is anti-profiteering. For ensuring that the benefit is getting passed on to the customer, I am sure that government will adopt a robust anti-profiteering provisions over there. And therefore, for industry, it is very important to ensure that they create a robust documentation and prove that the benefits are being passed on to the consumer. Third point is around the invoice management system. I think government is talking about pre-populated returns, which means that invoice management system will become mandatory over a period of time. I think government's IT readiness is very good, and therefore industry needs to adopt that particular change. And the fourth and the most important point, we have been talking about for last 5 years around Make in India, and all the state governments have been giving state incentives in the form of GST subsidies as well. Now, if someone has negotiated a net SGST or a gross SGST, and assuming the rate of tax is going down from 28 to 18% or from 12 to 5%, the entire economics or the maths which was done by them with respect to return on capital employed will undergo a big time change. And therefore, they will need to negotiate with the state government with respect to the state incentives which they have aligned when they have decided to set up their manufacturing.
Point taken. We also have with us Rishabh Jain, Bikaji Food International. Mr. Jain, I want to understand from you, how will this two-rate structure impact especially you? Because currently, as we know, processed foods are under 12%. Do you expect it now to move to 18 or 5%?
So largely, we think this food is part of essential items. So all namkeens and all will go into 5%. That's what we think as an industry player. And it will be great for all. We see good rate of volume going up in this category. And simplification of this will also be put up a lot of good money in the hand of all rural, because we will pass on the prices. All the industry players will reduce their MRP, good for the industry and good for Indian consumers. So good for the industry, I think.
Indeed, very good for the industry, and hoping for a 5% tax slab to be indeed there. But Rishabh, also help us understand that with respect to this particular cut that we might see on the GST, if at all it gets to 5%, how do you plan to really give that benefit to the consumer? In what staggered manner, if at all, will you be doing that? What is the plan regarding that? Rishabh, this question is for you.
Yeah. So largely what we see that for two-way in the sense, like this essential item, like snacks category more is 5 and 10 rupee. With 70% of business come from impulse, like it's 5 10, more of rural. So we're going to up the volume. So currently it's more consumer friendly. We'll give you more volume. And in family pack, which is upper of 5 10 rupee, we'll reduce the MRP. So that's good for the consumer also. So we will see good volume up going forward after this GST rationalization.
Right. Saurabh, I want to come to you. In between, the comments are coming in from state FMs saying that there should be compensation for the states as well. Now, the whole point lies in implementation. And Saurabh, which are the roadblocks you see there will be for implementation at all? Or should we understand now, Prime Minister has announced, GeoM has actually approved in a very quick manner. This could see the light very soon?
So, Ankur, if I have to look at it, I will say that I think the alignment was already done by the center with the state governments. That's why the GOM has been able to push that particular agenda forward. Of course, there will be issues around compensation, which the states will be asking for. We'll all have to wait for. I think there is a clear push from the center side. So if at all there is a compensation related thing coming from the side of the state governments, I think center will agree to that particular demand of the states, which in my view is to an extent a correct demand as well as far as the states are concerned. But I do foresee, if you look at the overall collections, I think 22 lakh crores was the collection in the last fiscal. So the manner in which the collections have been growing with the rate cuts, what happens is the taxable base also increases. That particular taxable base increase will take care of the decrease in taxes arising on account of rate reduction. So I don't foresee that there will be much impact as far as the collections are concerned. There will be some bit of impact, which is already factored.
But Saharsh, just wanted to have your comments, like you were just highlighting that the discounts are already at an all-time peak and the industry body really wants a decision to be taken quickly. But given the expectation that there could be some rate cuts and rationalizations, what's your sense? Which segment will outperform this particular festive season? Is it going to be the entry-level two-wheeler, the entry-level cars that will see a lot of excitement, or rather the agri products? Because from tractors as well, if that 12% is getting scrapped right now, then the expectation is that it will shift to the lower base of 5%.
Yeah, so as you have already said, agri sector and specifically tractors are already doing good because of a good monsoon season, what we are seeing right now. Apart from this, the SUV category and the compact SUV as well as the SUV category are also performing well. There was slight softness in last 2 odd months, but the segments which were not performing were the entry level two-wheelers and entry level cars. And I think this GST reduction, and I'm saying once again, if it happens on time, it will actually work as Sanjeevani Booty for revival of both the entry level categories, because these are the segments which have seen the biggest brunt of price hike, GST high rate of GST plus the price hikes because of emission norm changes, because of safety regulations which have come in from time to time. So it will definitely act as Sanjeevani Booty because there'll be clear-cut 10% reduction in the GST from 29%, which is 28% GST plus 1% cess. It will come down to 18%, and it's a clear segment which we are anticipating will start performing and will see green shoots in times to come.
All right, those are the comments coming in from Saharsh. With this, it's time for a wrap in this special discussion. Thank you so much, all gentlemen, for joining Saharsh, Saurabh, as well as Rishabh. And of course, it is a kind of Sanjeevani which has coming in, started from Prime Minister in the Independence Day speech. And finally, in a quick time, even GOM has given approval on the same. Now, all eyes will be there on the final meeting of GST for this approval. With this, it's time for a wrap and see you after the break.